Hello friends, a very warm welcome to my channel. In this video, we are going to talk about another very interesting company, that's Ceinsys Tech, and the company has rebranded itself recently to CS Tech AI. So I've been getting a lot of requests to make a video on this company and this geospatial industry, and that's why without a Telegram poll, I've chosen this company this time. Before we move forward, if you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Now you can watch our videos in Hindi also. In the settings, you can choose your preferred language to Hindi. Here's a small disclaimer: as per SEBI regulations, you can pause the video and read it. So we'll be analyzing this company in briefly three parts. The first one will talk about the business of the company. The second one will decipher the financials of the last 5 years. And the third one is where we talk about the valuations of the company. So let's start off with the business model. So Ceinsys is basically a company that uses maps, images generated by various ways like drones, satellites, and collects a lot of data, creates a lot of images, and using their proprietary softwares analyzes all those things and gives it to the government departments and various other corporations to take decisions of planning, building, modification of several assets. So in simple words, what is it doing? It is helping the government and other public sector utilities take decisions about different infrastructure projects using various data and images collected by this company. The software which this company uses are not built from scratch by the company. They have developed it on top of ESRI ArcGIS, which is a globally recognized platform. The way Indian IT companies are implementing or creating small softwares over and above Microsoft Azure and other platforms, similarly, this company has also developed their own proprietary tech on this particular platform, which is ArcGIS. So the company has broadly two segments. The first one is the geospatial and engineering services. This is a segment where they get project-based revenue. And the second one is the technology solutions, which is related to their different softwares and other solutions. And broadly, they get about 49% revenue from their project business and 51% revenue from their technology business. More or less, it is 50-50. In terms of margins, the technology business enjoys better margins in the range of 27 to 32%, while the project-based business, which is a geospatial business, the margins range between 18 to 24%. Now let's talk about each business segment in detail. The geospatial and engineering services, this is the project-based business. In this, they do GIS mapping, data creation based on different surveys that they do on the site, on the field. Then they do design and consulting for various projects. All these things help the government take decisions as to what to do with different infrastructure projects. So let's say the government wants to set up a water pipeline. This company helps to capture all the existing water pipeline network in a particular area and create a digital replica of the entire city or that area and give it to the government. They give a lot of other data inputs, with the help of which the government takes decisions. So for the examples, take water networks, electricity networks, smart cities, all these things can be mapped using their technology. In this segment, as we discussed, the revenue is project-based. So depending on the project completion, on milestone basis, they get money. This is a tender-based revenue, wherein Ceinsys bids for tenders against the several competitors and wins the tenders. Several government initiatives like the Jal Jeevan Mission, National Geospatial Mission, all these initiatives also involve business for this company. The second one, which is a technology solution segment, here they have developed full-fledged AI-enabled softwares for these companies. This segment is growing faster and it's a higher margin business. Using this software, it creates digital twins of different infrastructure projects for the government to take decisions. They can also provide real-time data and images using drones and different satellites. Government or other companies or corporations can monitor various infrastructure assets. They can identify what is going wrong in the infrastructure, which pipeline is not working, which transformer has become overloaded. So all these things can be monitored quite sharply. And generally these contracts are multi-year contracts where they get annuity income. The third one, which is a much smaller compared to the first two, is the mobility and product engineering. This came into the being with the acquisition of a company called Allegro. So in this, they are working in the auto segment, which is a new addition to the existing business where they design different auto components for different companies. They also design different machineries which are used in the auto industry for different companies. And again, this is a long-term annuity-based kind of a business. The fourth and the latest one is the AI and ML embedded electronics vertical. In this, they are developing AI-enabled applications and softwares. And whatever data they have accumulated over a period of time, on top of it, they are building this AI applications. In a simple way, consider the first segment to be the project-based business and the rest of the three under the technology-based businesses. The geospatial industry in India, roughly in the year 2025, which we are in currently, may be around 25,000 crores. And going forward, it may reach 1 lakh crore by 2030. Now, this is not the total addressable size of this company because there are so many things which come under this industry which may not be relevant to this company directly. But as an industry, this is roughly the size of this industry and this is where it is heading. Among the listed peers, this company has MapMyIndia as a peer, Genesis International, which is another peer, Cybertech Systems and Software, and a segment of Cyient Limited is also working in this space. All these are not identical peers, but somewhere or the other, there is some overlapping in their businesses. In the unlisted space, there are several companies which are also doing this business. So this is not a monopoly business which this company is doing. Now, what are the entry barriers in this industry? So any normal IT company cannot just overnight come into this industry. It requires deep knowledge of the GIS platforms which they have worked in over a period of time. They should have an understanding of India's civil and infrastructure. They should be ready to work on the ground and not just sitting in the cabin. And over the last decade or two, whatever data the company has already collected or mapped, that is an asset with this company, which a new company cannot create overnight. Then the new entrant should have the capabilities and patience to bid for different tenders, win them. And for these tenders, there should be some track record for the eligibility. Then practically when they do business, this is a lumpy business. In 1 year, you may get a big contract. In the next year, it may not. Then cash flow also may be tight here because the payments come very late and sometimes they don't come also. So these are the entry barriers in this business. And just to give you some data as to what this company has achieved over a period of time, the cumulative work done so far by this company, over 7 million is the engineering hours delivered till now. More than 1 lakh miles of electric network the company has already processed. So this much data they already have. 35,000 plus miles of water network they have done. And 2.2 million square feet of urban infra they have mapped already. And totally 6.5 lakh miles of image data they have already processed. So by these numbers, I'm just trying to give you a fair idea as to how much work they've already done and how much information, data, images is already available with this company. That is an edge over the new entrants. Now, what are the growth plans of this company? As of now, for the quarter ended September 30, 2025, the order book is about 1,000 crores. Compared to about 400 crores, the revenue which this company did is nearly double than FY25. Generally, in this industry, the average execution time is about 18 to 24 months. So that can be the execution time for this order book, provided there are no projects which are put on hold. Around 100 to 150 crore is an annuity business they'll get on top of this order book which we are talking about. And right now they are working with roughly about 100 clients which their projects are already in execution. Going forward, they look to get empaneled on more government projects, focus on the Asian and European countries, expand outside India. They have recently acquired a company called VTS in the US and shift to higher margin business using AI, and they are even open for inorganic acquisitions. They are actively bidding for larger size orders right now between 50 to 150 crores per project, but they are not giving any specific guidance as to this much will be the revenue or margins in this year or the next. They have recently incorporated a subsidiary in Saudi Arabia, so they are looking at the Middle East business as well. Now, what are the risks of investing in this business? It's a very lumpy business. It is not a steadily growing business over a period of time that you can observe in the financials as well. There is very high dependence on the government. Based on the policies of the government, the business will be drastically impacted. There could be delays in the tenders which the company has already won. There could be delay in the on-ground execution. The payments may be really slow and sometimes there may be bad debts also. It's a working capital intensive business. Roughly about 80% of the receivables are from government. And the acquisitions which the company is doing, integrating those new companies in their existing business could be a challenge. So you should be very mindful of these risks before investing in this company. Now let's talk about the second part of the video. Now we have concluded the business model. We'll look at the financials of the company. In FY21, the company did a revenue of about 185 crores. Up to FY24, it reached only 253 crores. So there was not much growth. There was a jump in revenue in FY25 and it jumped to 418 crores. This was because their second division, which is the technology solutions division, grew almost 3 times. And there was an acquisition which got merged with this company that also led to this growth. EBITDA grew much faster from 18 crores to 44 crores in FY24, then doubled to 80 crores in FY25. EBITDA has grown faster because EBITDA margin has expanded. From 10% in FY21, it is now at 19% in FY25. This is mainly due to the technology solutions division, which has higher margins. It's a very high ROC business with 26% ROC. Promoter holding is down to 50%. This is one area where we should watch for. There is certain holding which is still pledged. The debt is low, but the debtors are very high. I'll show you the breakup of the debtors, which is very important for this company. Cash flow conversion is fairly good, about 75% of EBITDA is getting converted into cash flow, but payables are high. Now, why are payables high? Because certain payables they have linked with the revenue. As and when they get revenue from a project, they'll pay the creditor. That is why the payables are high. Another gray area in their financials is the goodwill and the intangibles amounting to over 40 crores. They have recently paid an ESOP payment, the share-based payment of about 13.25 crores to Mr. Prashant Kamath, and he has resigned as a CEO from this company. So this is a little strange to me. Although he has been paid based on his past efforts of scaling the company, but still getting such a big ESOP payment compared to the scale of this company right now of just 400 crores revenue. Immediate resignation after the ESOP payment somewhere in our mind raises a question. And on top of it, the CFO also has resigned. Look at the balance sheet of this company. There are continuous dilutions, which we don't like as shareholders. Every couple of years, there is equity dilution done by the company. The shareholding is dropping from the promoters and from 75% to roughly about 50% now. And the number of retail shareholders is going up constantly. This is the trade receivables aging schedule of FY25 from the annual report. Out of the 122 crores trade receivable totally, then between 2 to 3 years is about 4.3 crores. 1 to 2 years is 4.8 crores. 6 months to 1 year due is 17 crores. So there are a lot of trade receivables which are very old and on the verge of getting written off. So all this will impact the business of the company and its financials, as this will directly hit the P&L and compress the profits. And structurally also, if a business has the risk of so many bad debts, it is generally not a very safe business to invest in. So this brings us to the end of the second segment, which is the financials part. Before we move forward, if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day before the market opens, I share my views on the market. I share a lot of interesting strategies to help you earn better returns from your portfolio. More than 9,000 people are a part of my Telegram channel. Now let's come to the most interesting part, which is the technical analysis and the valuations. If you look at the chart from 2023, it gave a very sharp run up almost to 2100 zone. Came down once, attempted another rally, and now it is back to about 973. So the chart is very weak, and the next support zone is somewhere around 750 zone. There is no respite on the chart, no consolidation. So the chart seems like a falling knife and the correction may further continue. If you look at the valuations, EV/EBITDA is around 11.7x, roughly about 12x, which is equivalent to 5 years median of 12x EV/EBITDA. So the valuations are more or less reasonable now, but the chart is very weak and the correction may continue going forward as well. Things like uncertainty in the growth, writing off of bad debts, exits of the top management, valuation derating, which was very expensive at one point of time. All these things are contributing to this fall in the share price of the company. Now, if you're an existing shareholder in the company and you have not sold it at the top, it is kind of late to exit now, and you may give it some time as the valuations have slightly become reasonable, but you should be prepared for another correction of roughly about 200 rupees from here. But if you can't bear such a correction, then you should exit right now and maybe re-enter later when the stock stabilizes. And as a person who's looking at a fresh entry, it's like a wait and watch mode right now. You should wait for the stock to completely fall to the level till where it wants to, maybe consolidate a bit, let the new management settle, let the stock also consolidate and begin its upward journey. Let the order book improve, because in the recent past, the new order wins were not very impressive. So when all these things align, then you should think of a fresh entry in the stock. But till then, right now, it is more like an avoid kind of a stock. So that's about Ceinsys Tech. I hope you like the crisp video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Even this was picked up from the last video's comments. Do join our Telegram channel by clicking the link in the description. Thank you for watching and have a wonderful day.